Hi, my dear friends. Welcome to FinveStocks, the Learners Club. Today, we will go through the ultimate candlestick pattern training course where you can find probability trading in bull as well as bear market using candlestick patterns. Now, some of you may wonder how will this help me as I am new to trading who is unaware about candlestick or technical analysis. Here we will cover A to Z of how to trade candlestick even if you have zero experience. By the end of this session, I can assure you with some practice, you will be able to trade candlestick pattern like a pro. Sounds good? Then right away let's jump into what is a candlestick. So candlestick is a type of price chart which used in technical analysis that displays the low, high, open and closing price of a stock for a specified period. It originated from Japan rice merchants. The history of candlestick I explained in my earlier videos. Kindly click the I button above to see the history of candlestick. So what is a candlestick chart? Candlestick chart is nothing but a method of reading price chart made up of candlestick. Now let's see how to read a candle. As shown in the figure, candlestick can be green or red. Green candle is called bullish candle whereas red candle is called bearish candle. The open price, low price, high price and close price. When the close price is higher than the open price, it is called a bullish candle. The color of the candle will be green in color. Similarly, when the close price is less than the open price, it is red in color and is called a bearish candle. Now let's see how the candle is being plotted. Assume the stock open at this price. From here it pushed down to a low price. There the buying starts and it start moving up. And when it reached the higher price, from there selling start and it's come down slightly and it closed here. So this is how this candle is being plotted. As the close price is above the open price, it is showing a bullish pattern and this is called a bullish candle. The green part is called the body of the candle, whereas the two lines plotted on the top and bottom is called wick of the candle. Similarly, for a bearish candle, assume the price opens at here. Then it start moving high. Then the selling starts and it come down to a low point. From there, again the buyers push back and it closed slightly above the low price. Here the close price is less than the open price, so it's a bearish candle. Here the red part is called the body of the candle and the two lines on the top and bottom is the wick. We will understand more about candle in the upcoming slides. So what is a candlestick pattern? A candlestick pattern is a method of reading price chart. So the key components of a candlestick pattern is four things. High price, that is high price of that session. Low, that is low price of the session. Open price and close price. When I term session, session can be in terms of time frame. That can be in a day chart it will be daily basis. On an hourly chart it will be hourly basis. So if I say high price of the session, for a day chart it is the high price on that day. And on an hourly session, high price is on that 1 hour, what is the high price? Now let's see how to read a candlestick pattern. There are four price points in a candle. First one is the open point, then comes low point, then comes the high point and close point. Typically, these 4 points are being used to represent a candle. Normally, there are two types of color patterns in a candle. First one is the green candle and second one is the red candle. Generally, green candle shows bullish candles and red candle shows bearish candles. In some cases, bullish candle is being represented using green as well as blue, whereas bearish candles are represented by red as well as black. But commonly, green is for bullish candle and red for bearish candle. Now let's see how to represent a bullish as well as bearish candle. In this particular example, assume the stock price opens here at the open point. From the open point, the stock moves down and it will go to the lowest point of the session, that is the low point. From there, it moves back to the high point of the session and from there it comes back and closes at the closing point. When the close point is higher than the open point, it is called bullish candle. Similarly, bearish candle, the candle opens at the top. From there, went to a higher level. From there, it come back to the lower level and it closed somewhere here. So the close point is below the open point. So it is a bearish candle and red in color. The main area where the color is there is called the body of the candle. And the two shadows on the top and bottom represent wick of the candle. The wick will show the highest and lowest point of a particular candle in that session. When we mean about session is the duration of candle. When we draw a candle, it will be of a particular timeline. The timeline generally can be day candle, hourly candle, can be minute candle, second candle also. So the price points, which is open, close, high and low, represent to a particular duration. So the two main components of a candlestick is body as well as wick. Typically, a candle will show the story of the price action at a particular timeline. Now let's see how to read a candlestick pattern. So the main four components of candlestick by which it form is the open price, the close price, the high and low price. So here in this example, the stock opens here and from there the strong price action push the stock to a higher value. The high is somewhere here and from there the sellers come into action and it start pushing the stock price from high to its closing price. Here the low is equal to the open. That means there is no wick on the bottom. On the higher side there is a small wick which shows weak price rejection. The strong body shows control of buyers in this candle. The length of the body shows the bullishness of the candle. Here the length of the wick is so small compared to the body that shows a weak price rejection. The closing of the stock is near to the high, which shows a bullish candle. Normally, the length of the body will show who is in control. The higher the length, whether it's green or red, which will show who is in control, whether the buyers are in control or sellers are in control. Wick shows price rejection. The stronger the wick or the lengthier the wick shows higher price rejection or strong price rejection. The two main components of a candlestick is one is body and other one is wick. The size of the body decides whether the buyers are in control or sellers are in control. The wick shows the price rejection. Let's see the second example wherein the stock price opens here. From there, buyers are in control and it pushed the price to a high price. From there, the sellers come into action and it start pushing the price from high to the closing price. As the closing is near to the opening price, the body of the wick is very less compared to the length of the wick. The lengthier wick shows strong price rejection. The total control is taken by the sellers. So always green candles are not a bullish candle. Here in this case, because of strong price rejection, the sellers are in full control even though the closing is above the open price. The candle is green but still it's a bearish candle. It shows strong price rejection and the sellers are in full control. So now let's see some of the various candle patterns. The first one is having a long body. It is having a green long body which shows buyers are in full control and the wick is so small. So here in this case, stock price opens here. From there, the sellers are in control and sellers push the stock from opening level to the bottom. That is the low of the session. From there, the buyers are in action and buyers start pushing the price from there to the high position. Once it reaches the high position, the sellers are again back in control and sellers rejected the price and pushed it to the lower level. So it closed over here. So if you see the closing, it is much higher compared to the opening price. So it shows a bullish candle because the length of the body is much higher compared to the length of the wick. So the wick is small compared to the overall body and the body is green in color, so it's a bullish candle. The second one is having a small wick and the body is also small. So the price open here or the sellers come into action and it pushed the opening level to lower level. So once it reaches the lower level, the buyers are in action and buyers start pushing the price from low level to high level. Once it reaches the higher level, then again the sellers start pushing back and it closes just above the opening. So as the closing is above the opening, it shows a green candle. But the body is so small compared to the wick. So there is a price rejection at lower level as well as higher level. And the closing and opening is not much different. This shows both sellers as well as buyers are in equal control. So this type of candle is called an indecision candle. So this is not a bullish as well as a bearish candle. This is called an indecision candle. And the third one is the stock price opens here. From there, sellers are in action and it pushed down the stock to a lower level. And from there, the buyers come into action and buyers push the price level to a higher level and it closed at a higher level. So here in this case, the closing is above the open level and at lower level, there is a good price rejection because of long wick. It is a bullish pattern. So the buyers are in full control. That's why at lower level, the buyers start pushing the price to a higher level. So the next one is just opposite to the first candles. First one is a red candle with long body, shows bearish candle. The stock opens here and it goes to a higher level pushed by the buyers. Then the seller starts in action and it pushed down to a very lower level. So here the body is significant compared to wick. Wick is very small. So the sellers are in full action and they have the full control on this session. Similarly, the small wick and small body shows indecision candle and the third one is price rejection at higher level. So the buyers push the stock to a higher level and the sellers start pushing down to a lower level. Shows it's a bearish candle. So as a summary, candlestick chart shows who is in control, whether buyers are in control or sellers are in control. The main thing to observe in a candle is body, wick and body's length relative to wick, which will show whether the candle is bullish, bearish or indecisive. So once you are aware who is in control, whether the buyers are in control or sellers are in control, the next thing required is conviction of moving up or down. One method for getting convinced whether the stock price will move up or down is based on support and resistance. So in this chart, we can see the support line as well as the resistance line. So this is the area of zone where it will have strong resistance. So in this resistance zone, if you are getting some bearish candle, then it will show a conviction to move the stocks down. Similarly, in the support region, if you are getting some bullish candle, it will give a conviction so that the stock can move upwards to the next level. Similarly, for conviction, we can use other methods such as moving average, trend line, etc. Now let's see how a candle is being plotted on a particular duration. Here in this example, we use 5-minute candle. In this particular example, the stock opened at a price over here. From there, it starts moving down to a low point. From there, it starts moving up to a high point. From there, it will come back to the close. So as the closing is above open, it is a bullish candle. Similarly, if the close is below open point, it's called a bearish candle. And the overall duration for this candle is 5 minutes. So one have to plot all these 4 points in this specified duration, that is 5 minutes. Now let's see an example. Here, a particular stock opens at this level at first minute. From there, it starts moving and at third minute, it touched the lowermost point. From there, it starts rising and touched the highermost point at 4.5 minutes and then it closed at 5th minute. So in this chart, we will see the open point is here, then comes the low point, then it moved up to a high point and finally it closed at this closing point. So based on these 4 points, the candle has been plotted. The overall duration of the candle is 5 minutes. Similarly, if you want to plot a day candle, instead of 5 minutes, the whole duration will be a day. In our next video, we will talk more about single candlestick. As the name suggests, a single candlestick pattern is formed by just one candle, normally for a day's duration. So the trading signal is generated based on a day's trading action. The trades based on a single candlestick pattern can be extremely profitable, provided that pattern has been identified and executed correctly. There are different types of candlestick pattern. Some are bullish reversal, some are bearish reversal, some indecision candles and trend continuation candles. We will see each one in our next video. In our next video, we will see single candlestick pattern. The main type of single candlestick patterns are doji, which is indecision candle, then the spinning tops, that is also a type of indecision candles, then the bullish marabasu and bearish marabasu, hammer, hanging man, and inverted hammer and shooting star. So we will see in detail each one by one in our upcoming videos.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.